morning. Thank you. It's a pleasure to be here today with Jan, Michael, Robert, and Brett. I will be your AI agent moderator this morning. So we were going to get right into it. So Jan, I'd like to start with you. Can you talk to us a little bit about what we're seeing in terms of the US forecast for 27?
Yes, good morning. Thanks to Questex. Thanks for having us back on the stage at NYU IHIF. I'll give you a second to take a picture of that because I know you want to. This is our new forecast. We revised it up by, technical term, a lot. So RevPAR growth for this year, 2.8%, driven by, as you can see here, room demand went from negative last year to positive this year, which is giving some pricing power to the tune of around 2% or so. You just heard Adam. Inflation is above that. So that is going to continue the conversation that we've had for the last year and you're going to have this afternoon about margin pressure, how do we make margins stick. So 2.8%, certainly healthy, and we expect to look at that again at our own conference, the Hotel Data Conference, later this year. You saw our forecast for supply growth, 0.4%. Supply is not a big issue. A lot of you in the room trying to figure out how much does it cost to build and what do the interest rates look like. We're not going to make a forecast about interest rate environment, but you're clearly seeing here that the number of rooms in construction continues to decelerate. I would not take the last data point here as an indicator of anything but a blip. So we used to have between 150 and 160,000 rooms in construction. That number has come down. We don't expect that to change unless you are in Nashville, Dallas, Houston, Phoenix, Denver. Everywhere else, it's really hard to get anything done. Now, breaking out the forecast by price point. A couple of things to note on this chart. Number one, oh, look, we're expecting every branded hotel in the US is going to grow RevPAR. Even economy, barely-ish. Of course, luxury continues to win. What's really good to see here is that we have widespread demand growth forecast, specifically in the middle of the chain scale. So upscale, upper mid-scale, and mid-scale. We're projecting that this year is actually very much a reversal from last year and that room demand is going to continue to grow, which then gives us some pricing power. Again, you know, if you compare that to inflation, maybe not a whole lot. But that said, we're proposing that some of this will trickle down. This is a new data set that we haven't traditionally shown. Isaac Collazo from STR has spent a lot of time and effort in figuring this out. So we're proposing that for this year, GOP margins are actually increasing. So GOP per available room is up. But look on the right-hand side. The problem is that in real terms, as economists use, so if you take out the rate of inflation, we are still, call that 20% or so in margin terms below 2019. So to sum it up, RevPAR growth healthy, supply growth is not an issue. We're expecting some pricing power across the chain scales, and yes, some margin expansion, but not enough to outrace inflation. Thank you.
Thank you. Thanks, Jan.
And that is
Michael.
That's pretty much a good handover point, I think. It was almost like it was intended that way, right? So I'm going to just take you through some of the kind of marginal stories. So if you look at the last 4 years preceding 2025, we saw the decline in margin of around 2 percentage points or 200 basis points. And you know, a lot of that came from slow demand growth, but also, more importantly, such high levels of cost increase. If we look at last year, throughout the whole year here, you can see in that kind of middle ground with labor costs in particular, but also energy costs, we saw IT expenditure increase dramatically over that 12-month period. And basically, the flow-through story for 2025 is we saw around 18% of every incremental dollar flow to the bottom line. So a real challenging year. The reason I've split it in this way is because we've started the year quite strongly. Actually, demand has been pretty strong, as we've seen through Jan's numbers there. And it's offset, even though the costs have continued to increase at a similar rate, albeit we're starting to see labor costs slow slightly. Most of this is now the level of flow-through that we're seeing has really helped margins. So the 0.5 percentage point we dropped in 2025 due to these pressures, we've already regained in the first 4 months of 2026. So a real positive start. And a lot of that has come from the fact that it's not just rooms growth. In fact, rooms is the slowest growing area of the hotel performance, as you can see from this chart. So food and beverage has been pretty strong. You've seen conference and events returning. Again, to this ongoing trend of uptick in conference and events in the region has been an incredibly good story. And of course, we have so many major events in the country this year that we should continue to see that grow. Areas like wellness and golf and the other ancillary services also growing really strongly. So again, this is a real focus point for me that I think hoteliers need to concentrate on. RevPAR growth is great. We've got this real nice point in time from a demand perspective, but actually guests are spending a lot more on property, and we should be maximizing that in order to be able to offset these cost challenges that we're going to continue to see. And you can see that in the numbers here. If you just take the first 4 months of this year, you can see the TrevPAR line there at around 5.3% on average across the country. You can see here, for instance, pretty much all of the cost lines have continued to grow. This is the labor costs. And other than kind of 1 or 2 areas of it, the revenues have outpaced the labor cost increases, again, supporting margin. And from the actual expense lines, well, other than those areas that stand out, booking costs will probably take with a bit of pinch of salt because that does, of course, increase with the revenues. But what we see here is like laundry costs there or linen costs up at 8%. We've seen IT expenses there 9%, and utility costs was the other one that stands out right now at just over 6% year to date. I'll leave at this point a few things to consider, I think, when we're trying to consider what's going to happen with the margins going forward. We do have quite good tailwinds from the revenue perspective, which is my final point there and the one I'd like to linger on. But we do have some headwinds when it comes to the expense lines, and a lot of this comes from changing guest habits. Of course, we have much more of a move towards technology and the expense that comes with that. The way that we go to market with the ever-changing kind of direction of digital marketing and the enablement of AI. And of course, customers do want to use credit cards, they do want to use their loyalty programs, and they want to book online. It comes with an expense. But of course, what we do have up our sleeve is this ability to be able to drive the top line through those channels. The energy costs were predicted for this year to actually shrink in 2026 and again into 2027 globally. But of course, due to events at the beginning of this year, that bit is a bit uncertain. Thank you a lot for that. Over to you.
Great, thanks. Thanks, Michael. Robert, so first time as a panelist here with us, so can you tell us a little bit about NTTO and its role in the tourism industry to start?
Absolutely, thanks. Thank you for being here, Susie. So NTTO is a sub-agency within the Department of Commerce, and our role is to oversee travel and tourism for the United States. So we do economic research reports on travel, we do economic forecasting, we're the official liaison with Brand USA. Every 5 or 10 years, we do a national travel strategy. And we work across the agencies to do things to boost travel and tourism. We kind of have 2 mandates. One is to boost travel and tourism, and secondly is to boost the importance of the travel and tourism industry. So I brought this slide here because I wanted everyone to see just how big an impact travel is, especially compared to other industries. Travel is America's largest service export. When someone comes to the United States and spends money, we count that as an export. It's about 22%. It's a really strong it's a really strong engine for the economy. And travel, you can see, is bigger than machinery, is bigger than agriculture, bigger than automobiles, and bigger than aircraft. So what we want to do in Washington in collaboration with the industry is to make sure the travel industry speaks with one strong voice so everyone understands the impact, because travel impacts us economically, also impacts us socially as well, right? When people come to the United States as part of the U.S. soft diplomacy, we know from studies that when people come to the United States, their opinion of the United States improves and gets better. So that's really one thing we want to do. So we look at ourselves as a front door, and the reason I'm here at NYU is I come from the hospitality industry, and I know that as much as travel is economic engine, I know hotels are really the heart of that engine, and I know it's the owners in the room with your hotels that are not just investments, but they're also full of employees who we consider to be kind of ambassadors for the United States, and a large part of the reason people want to come back again is the experience that they have with your staff. Secondly, as mentioned, we do forecast for travel, and you'll see we're pretty bullish on the travel industry over the next 5 years and even over the next 10. And we'll talk about that more because of all the big macro events coming in. So we believe there's a lot of tailwinds coming in that are really going to boost international travel to the United States, and you'll see we're projecting 25%. Last year we had 68 million people come in, and they spent about $250 billion in the U.S. economy. And that's just a really good contribution, and we expect that to get up to 85 million by 2030.
And Robert, just as a follow-on to that, in terms of international visitation and coming into the US, thoughts on visa wait times and its effect or not on travel?
Yeah, that's a great question, especially with the World Cup coming up in less than 2 weeks now, and it starts in June 11th in Mexico. That's something the administration has really been focused on. In fact, one of the things we're really proud of is we've reduced visa wait times in over 80 countries to less than 60 days. And in many of those countries, the wait time had been over a year. We also announced that between October 25 and May of 26, there have been over 5.1 million ESTA appointments. So we are working hard to make sure people can come to the United States. That is our message. If you're a legitimate traveler, we welcome you, we want you, and we're working hard every day to make it easier to come into the United States. And that's really the purpose of all these big events that we're trying to bring to the US. At the heart, these sports events are really travel events. And I don't know if there's ever been a time when the federal government has done more to stand up for the travel industry than it is now, between the events we're talking about, from the World Cup, America 250, Centennial 100 road trip. We got the LA Olympics and Paralympics coming in, men's and women's rugby World Cup 2031, 2033, Park City Olympics in 2034, and I'm sure people saw the president announce an intention to bid for the Miami Expo in 2035. So there is a decade of big demand that's setting up for, and we think that demand is going to really put the United States and travel into the spotlight.
Perfect. Great. Thank you. Okay. So Brett, as a Chief Advocacy Officer for AHLA, maybe putting a little bit of a different spin on things, can you talk a little bit about some of the macro trends that you're seeing, and then maybe the top couple of policy perspectives that AHLA is focused on and dealing with some of the challenges that we're seeing in the industry?
Sure. We hear from our owners, our members all the time, the economics of ownership have shifted significantly since before the pandemic. Operational costs have gone up 4x versus revenue. That compresses the margins, that impacts what people are investing in, that certainly reshapes investment, impacts the workforce. Labor costs, which are the highest costs for industry, are up 30%. Insurance and energy costs, all these costs are rising, and yet performance terms have not kept pace with that. From our perspective, we're an advocacy organization. That's a message that we bring to elected officials, from city halls to state capitals to Washington, D.C., to let them understand what's going on in our industry and how they can help. We just had our annual fly-in was last month. It was the largest attended fly-in. It was my first fly-in since leaving Capitol Hill after 16 years. And our message, with hundreds of hoteliers taking hundreds of meetings, was that this is the state of our industry. This is what we're looking at. But there are things that can be done, especially on the federal level, to help. Restoring Brand USA funding, which would boost international travel. Reauthorization of the USMCA, which is the United States, Mexico, Canada trade agreement that President Trump signed in his first term, would really protect cross-border trade. And then having timely and data-backed setting of per diems. So it's not just one standard per diem rate, and having transparency in how those rates are set. There are just a few of the things we talked about. We also talked about workforce development. One of the things that the government can certainly do, and we keep pushing this, is strengthening our workforce, our temporary guest worker program. Sorry. One thing I like to talk about is a lot of our seasonal workers, or a lot of our properties use seasonal workers. And the number for seasonal workers that it's set in statute was set in 1990 when I was in kindergarten. That was the last time it's been adjusted. So Wind Beneath My Wings won the Grammy for Best Song. No offense to Bette Midler, we all love her, but I think we can all agree that that program should certainly be updated. And so there's just a few of the policy areas, at least on the federal level, that we're looking at, and that we constantly are telling our members of Congress and the administration. We've had great conversations with the Trump administration, especially the Department of Labor, over the worker programs, guest worker programs, and that's what we're pretty much focused on, yeah.
Great, thank you. Well, I think we'd be remiss if we didn't hit on the mega events that are coming up, so World Cup, FIFA, rugby, et cetera. How are you all thinking about these are going to maximize the impacts to the different facets of the travel industry? over the next decade or even in the shorter term?
So we could not be more excited. We think these events, they're at their heart, they're travel events. They're going to bring millions of people into the United States. And the next 40 days of the World Cup is going to be like a 40 days almost public relations campaign for the United States. And think about the millions of people coming in. They're going to be all on social media, putting up their images, promoting the United States. And then hopefully they're going to go back to have a great experience and tell their friends and neighbors to come back to visit the United States. And we're also confident that a positive visit here is going to lead to their intent to return. So the administration has made a huge investment into the White House task force. We spent almost $1 billion on safety security. The president did an executive order for the World Cup to make sure it's safe, secure, memorable. And we're going to take the lessons learned from this, and we're going to roll them into the Los Angeles Olympics as well in 2028. So we view those travel events as really a great way for the U.S. to be on the world stage and to promote travel and tourism, which will drive future travel and tourism. This next decade is an unprecedented list of mega events, and we're hoping that this will give travel industry the spotlight and lead to a decade after that. So as people thinking of investing in hotels, it's not a question if the demand is going to be there. The demand is going to be there because the visitors will be coming here. Travel is becoming increasingly important, especially to the next generation. It's no longer just an activity, it's part of their identity. So we believe travel will become an increasingly important part of the economy in the next 10 years. So if you're thinking of building, renovating, buying, this is the time to be positioned to make sure you're taking advantage of this next decade, what's going to be unprecedented string of mega events.
I think we have two forecasts that we're pretty convicted about. One is that Germany is going to make it to the semifinals. We're very clear on that. And the other part is that this is going to be more an ADR event than an occupancy event. So the RevPAR bump that we're going to see is going to be mostly from ADR. You've read a lot of the coverage. I've been talking to a lot of reporters every hour on our forward-looking data that occupancy has not been as strong as it was a year ago. We can't forecast ADR on the books. That crosses a line that we don't want to cross. So the conversation has been a little bit too focused, from my opinion, on the occupancy side. The rate lift is going to be substantive.
And Brett, maybe as a follow-on to that, what is AHLA's stance on tourism promotion, and how is it going to leverage these major events?
Yeah, for sure. What we've seen, we were kind of excited about the World Cup. Obviously, this is a great opportunity. And so we started talking to some of our members, thinking this is going to be a great story to tell, and started getting some mixed messages. We actually commissioned a report that was out recently that showed, bookings are trailing early forecasts. And so we started kind of looking into, or talking about why that is. There have been state and local policies proposed that may discourage visitors, or certainly the geopolitical considerations. There's perceptions of the visa barriers. The administration's trying to address some of those. Those are all things that could possibly be driving down not the excitement, the bookings for the World Cup. But there's still an opportunity. Our hoteliers are prepared for the influx of travel. We hope that it picks up. And we see this as a real opportunity. Like Robert said, the next decade of all these big events are a huge opportunity, and even if the World Cup is not quite as much of a boost as we may originally have hoped, there's certainly so many events over the next decade that this can be a lesson of what else can we do, what can we, to go back to our lawmakers and say, our policymakers and say, here are things that we may have messed up on a little bit, or we should have taken these opportunities a little earlier to try to increase the international influx of tourism. So.
Great, thank you. Okay. All right, well, let's have a little bit of fun. We're going to do a rapid response round. We will pause if you disagree with each other, so keep that in mind. So I'm going to ask about some different kinds of data indicators, and so I want you to respond as to how predictive you think it is for the health and profitability of the industry. And so if I said, for example, RevPAR, you might say strong. If I said the Yankees, you might say weak. So that's an example. All right, so your one-word answer is weak, strong, or no signal. So Jan, we'll start with you. Consumer Price Index.
Strong.
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 Okay. Stock market.
Depending on where you are, strong.
I'm going to say weak, I think.
I'd say strong.
I'd say strong.
Okay. Consumer confidence.
used to say strong, and that's wrong. You know, weak. I don't get it.
I think the data now proves that it's weak, right?
You know, I would have said strong, but after Jan saying, I'm going to say I'll go with your weak.
Well, it's Adam Sachs.
I'm a political guy, not a data guy, so I'm going to go with the data guys.
Okay. All right. So Robert, we'll start with you for the next one. Inbound visitor volume.
Strong.
Strong.
Well, it's 1%, so strong for that.
Okay.
Oh, strong, yeah.
Brett, we'll start down with you for this one. Fuel prices.
Strong.
Short term, strong. Long term, weak.
I'd say very strong, but strong.
Very weak. I can take the exact opposite. We've tried to make this work and overlay fuel prices with RevPAR, and we can make it work. So apparently the American consumer doesn't care.
Yeah. World Cup ticket sales.
For the hotel industry, let's hope that that's strong.
Yeah.
I think overall weak.
I'd say strong but nuanced.
Okay.
You go with Robert's answer. Yeah, strong. That's a good answer. How about you?
Here's an interesting one. Short-term rental pricing.
Who steals from whom? Huh? Like who's trading
Right.
off who's? So I think if there's power in short-term rentals, that probably means it's strong for the hotel industry as well.
Yeah, it's strong.
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 Last one, unemployment rate.
Strong narrative correlation. So if it goes up, it's not good for the hotel industry.
It's strong.
The higher it goes, the stronger it becomes.
Agree.
What he said. Okay. Okay. I think we have time for a few more questions. So I do want to touch on artificial intelligence, finding its way obviously into everything, hot topic being discussed. So do you expect that it ultimately will improve hotel profitability through more pricing sophistication, labor efficiency, or some other means? What are some thoughts there?
I'd say AI is going to transform all of our lives, but I think on one level, the good news about AI is that AI is never going to replace a hotel room. So we're all going to be safe for that reason. So that's good news. And secondly, I think AI will help companies do a better job personalizing the experience for their guests, which will ultimately lead to higher levels of satisfaction, which will lead to increased travel.
I think it's a nuanced one, right? Because from an operational performance point of view, it should help to drive that, certainly that ancillary spend I was talking about, being able to capture a more personalized approach and maximizing spend on property. It should drive efficiencies in the operation, which, as you saw from the rising costs, is very much something that's at the forefront of the story. But at the same time, it really, for me, it links back to the unemployment rate, right? Which is like, if it does drive more people out of work, then of course it will increase the unemployment rate, and then it has an impact on disposable income and how that impacts hotels in the bigger picture. So I think it's quite a nuanced one, but immediately, like, yes, I would go to improving operations and driving profitability.
Yeah, I would go with that the labor cost aspect here is going to see a huge disruption. Everything that's not guest-facing, somebody is trying to figure out how to move that into the cloud, into an AI system. I was sitting this morning with a gentleman who's building an AI call center. So I think the question is, when you call somebody at the front desk, are you really talking to a person, or are you talking to a synthetic voice? I think all of that, we're in the early stages. It's going to impact labor cost, first of all. The thing I'm really wondering and watching about is that if the customer types in, show me the best 3 hotels in Nashville, Tennessee, and 3 links come up, who owns that link, right? Is it the hermitagehotels.com, or is it expedia.com/hermitagehotel? Right? And what does that battleground look like in the next couple of quarters? Who's going to own the answer to the customer? I'm very curious about that.
We've talked a lot about kind of overall the trends that you're seeing, and we actually, Deloitte just did our travel survey as well, and so very consistent with levels not being back up to 2019. But those that are traveling are kind of double-clicking and meeting pricing expectations, et cetera. So just curious as to what you're seeing individual consumer-wise. Are they trading down because of of pricing? Are they being more cautious or thoughtful, or going in the opposite direction?
So shout out to Maggie Rausch, who does the survey. It's required reading where I sit, and I hope it is for you as well. We have seen almost no price resistance on the very high end. You know, I'm presenting to owners and management teams and brands that play at the very high end, and they're like, look, people want it when they want it, and they're willing to pay for it. They do take the suite, they do take the upgrades. Multi-generational travel is alive and well. And I think the most important chart, I mean, all the charts that Adam has are important, but the most important chart he has was that the upper end, you know, the two highest cohorts of income are accounting for 51% of travel spend. I mean, that is exactly where we're seeing, you know, all systems go. Our forecast for RevPAR reflects that. We haven't seen a trade down for middle income America. We're projecting demand growth across the limited service sector as well. So far, so good, is what I would say.
Yeah, I mean, I agree. The data shows that economy hotels have been hit hardest over the last few years, right? The luxury segments continues to thrive. I think one story within this somewhere is the move towards package pricing and the all-inclusive segment. A lot of the brands have moved into that space. It's very much until now been seen as a kind of European model, but I think it's one of those things that people want certainty when booking. They want to, they don't want the idea that they're going to pay now, costs could change, their disposable income will change, and then over that time, they're going to end up spending more on properties. I think that's like maybe indicators early on. And anecdotally, we're in a lot of operator forums. A lot of the what I'm hearing is the kind of shorter lead time, so people book in closer to the date, which kind of contras that idea of the all-inclusive where they want the security from earlier on. So yeah, it's a real mixed bag, isn't it?
I think generally speaking, America and the world are becoming more mobile, so that's going to be good for travel, more people with traveling. I think also with the younger generation, travel is no longer just an option, it's almost a mandatory requirement, as well as with another big segment of like sports travel teams. So I heard a couple weeks ago someone said there's almost moats around the type of spending, that people will cut areas, but the younger generation is not going to cut travel because they need it for their stories, which is part of their kind of table stakes for their social standing. And also anyone with kids who do travel sports knows how important that is for the kid, for the family, everything. And that's another area that's going to be cut last. So those trends, I think, should bode well for future travel.
Okay. Well, maybe just one, maybe two closing questions. So one, opening day one of the conference, what are you looking out for over the next 2 days or most excited about?
So having conversations with owners about margins, margin pressure, seeing where and how that can work or not work, where you're willing to make cuts, where you're trying to drive revenue, how do you figure out the margin, and then talking to investors and figuring out what can be underwritten. The labor contract in New York was just signed. Does it make you more convicted in New York City now that you have clarity, and just in general, not just talking about the upper end, which is trading, and that's fine, but the middle of the road upscale type hotels, is there conviction in this room to trade more of those? I think those are sort of interesting topics that I'm going to have hopefully be part of.
Yeah, I think there's just so much going on in the world right now, and no more probably than this part of the this neck of the woods. I think I'm really intrigued to kind of learn more, get the pulse of the industry and what's going on in the kind of immediate term. And yeah, also we've got the asset management track today as well. I think that for the second year in a row we have the asset management award. I think there's a lot of the creativity amongst this noise under margin pressures within it does actually bring to the forefront that there might be an average, this is what we've just shown on screen, but there's a whole kind of gap between the top and the bottom, and those that are being creative and doing things differently will be the differentiators, right? The winners or losers. So.
I'm excited to listen, because one of our roles at NTTO is to listen, to learn what are the main issues the industry is facing, what ideas do they have, what can we take back to Washington, D.C. and attempt to socialize it across the administration, and also interested to kind of hear what some of the initiatives are with the hotel industry to make sure we continue to present the best possible guest experience for people coming to the United States.
Yeah, I mean, like I said earlier, we're an advocacy organization. We have our core issues that we know are real issues that we can take to the administration, to the members in Washington and across the country. But interesting just hearing from other people and picking up from conversations what other issues are percolating that may not rise to quite the level that we're going to hear about them internally. or have to deal with them internally. But yeah.
Perfect. Okay, last question. I may already know Jan's answer, but who's going to win the World Cup?
Deutschland, natürlich.
I know it won't be Wales. That's for sure. No, I'll be rooting for Deutschland, but I feel like France will be the winners.
Okay.
They've probably got 3 teams that could win this World Cup in themselves. So.
That's fair.
America first, United States.
Yep.
Well, that is a good one.
I got to be honest. If the LSU Tigers aren't qualified to play in a sport, I don't really watch. So.
Perfect. Well, it's been a pleasure, and appreciate your attention, and thank you, gentlemen, very much.
Thank you very much.
Take care.
Play, 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 and I